Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view, using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart.
Today I'll be looking long term at Chicago wheat. In 2023 I said the following, and I quote, "With a 2-month blip up in September and October," so that's September and October 2022, "and it is this blip that I wish to finally discuss. You see, I've looked closely at this blip up and a much smaller one in late 2021, as well as the big move up and down during 2022. And I've come to see it as a possible new, if extraordinary, pattern. Seems we might have an October 21 to date possible, very thin and tall head and shoulders top. I'm not wholly convinced as it is such a lanky giraffe of a pattern, but it is there, with seeming fairly flat neckline in the 738 zone." End of quote. That neckline is now currently 773.5, and we've pushed a long way down through that neckline since that commentary, all the way down to test the significant 38.2% absolute Fibonacci line at 521 even. On the way down, the market has been corralled for the most part by the red 1-year moving average, which is currently at 538.25, and on the outlying areas by the green 2-year moving average, currently at 561.25. I spoke on the downside potential last year, how we had, and I quote, "seemingly stopped dead at the 38.2% absolute Fibonacci line at 520.5. This Fibonacci line is within a wide congestion band between about 560 overhead down to about 420, dating between 2014 to 2020. However, though we have been stopped dead, prices still seem somewhat keen to test lower, as we still have the heavy pressure of the tall and thin head and shoulders top formed between 2021 to 2023, pressing down on the market. Thus, I can lay out the following potential targets below for a primary target X down in the 429 zone. For a secondary harder to reach target, I would say very, very much harder to reach target X1 down in the 122 zone. I know, you don't have to tell me that this is well below my monthly chart, but I'm going to tell you what I see." End of quote. I still believe these patterns and levels to be true today. Now, I also added the following comments last year, and I quote, "There are 2 other items I'd like to draw your attention to. Firstly, since mid-2023, especially taking into account the actions in 2024, we have a wideish bear channel highlighted in bright red on my daily chart, and that's currently 375.75 to 625.75. This seems like it may be a suitable vehicle to follow the market lower, especially if the market pushed down through the 38.2% absolute Fibonacci line at 521, or if prices pushed up through the upper bear channel line. Then it can be an early warning as to whether the market is changing away from the head and shoulders top and into something else. Secondly, keep an eye on that 2016 to date purple highlighted uptrend. That's currently at 493.25. Uptrends are not very good in this market at the moment, but it's still worth watching this one. That's just below the 38.2% absolute Fibonacci line and well within all the previously mentioned congestion." And that's the end of the quote. These comments also I still believe to be true and valid as we go into 2026. Yet to these I would add one further possibility, and that's to look at the mid-2024 today action as a possible descending triangle. I have highlighted this in bright green on my monthly chart, which is currently 508 even to 558.25. This pattern is somewhat optimized and is still in construction. So I'm not able to give you targets either above or below, but I can give you some potentials in case we see a break between now and the end of the year, which, to be honest, will probably happen. Thus, the primary topside potential would be 78.5 cents above the confirmed break higher, with a harder to reach secondary potential, $1.22.5 above a confirmed break higher. A primary target downside would be 61.25 cents below a confirmed break lower, with a harder to reach secondary potential, $1.22.5 below a confirmed break lower. These are approximate values. I would just add that as we are so far advanced along the descending triangle, the chances of a false break or even multiple false breaks are very high, so please be aware.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.